Welcome back. Piramal Enterprises is under pressure post the Q1 numbers. The NII down 25%. But what's helping is that buyback announcement. Latha caught up with Ajay Piramal to discuss more on the numbers. Listen in.
The overall book size remains the same as it was at 64,000 crores approximately. What has happened is that the constitution of the book has changed. As has been our stated policy, we are reducing the wholesale, which was by and large had a higher interest income that we were getting from wholesale. Okay. So we have consciously brought down wholesale. Compared to the previous, the same quarter last year, our wholesale is down by about 38%. And this wholesale is part of a strategy. We are increasing our retail mix. So our retail is now 55%. Okay. And I think that over time now in the next few quarters, you'll see that the income will come back.
Your buyback, that took people by surprise. PEL has never announced a buyback. In your pharma units, it was different. But this is a bit of a surprise. Why do you want to give money to shareholders? I'm sure you have a lot of growth plans.
So we have enough growth plans, but just to look at our balance sheet, our consolidated balance sheet in financial services has a equity of about 31,000 crores. Our debt to equity is 1.2 times, which, as you know, for any financial services company is a very low debt to equity. And what triggered off this buyback is the sale that we did for our Shriram investment, which got us about 4,800 crores. So I thought that it was in fitness of things that we should reward our shareholders because they've gone through some challenging times with us. So we thought we should reward them. Even now, after this buyback, our debt equity only goes to 1.3 times. Therefore, even if I take a growth of 20-25% for the next 4 or 5 years, I don't think we will need any more equity. So in that sense, this is better utilization of the equity. It's also a reward to shareholders who've been with us. And also it's important to just highlight that we as promoters have decided not to take part in the buyback. So our philosophy has always been that when the company needed the money, that was in 2018, 2019, we did rights issues and the promoters fully subscribed to that. So at that time, we put about 2,500 crores into the company. Now we feel that this is the time that let shareholders, the individual or minority shareholders get the advantage, and therefore we've not subscribed to it.
Well, that will be high on governance for sure. But let me come back to what I told you about wholesale. You know, the big giant HDFC has moved out. It actually gives you more scope to fund purchases, even land purchases. Why are you moving out of wholesale? Why not allow that also, especially if there are strong companies, and there are quite a few?
No, so let me clarify. We are not moving out of wholesale. What we are doing is that the old wholesale loans, we are actually reducing them significantly because there's a doubt in the minds of shareholders and investors that there is that the old wholesale quality is not good, and it's difficult for us to challenge that. So we are bringing that down, but we are bringing out a new wholesale 2.0, which already has a book size of about 3,500 crores. So in that sense, it's a mixed strategy. The old one is coming down and there's a new avatar which has come.
But let me persist. Are you likely to make more money in lending to land and builders because a big competitor is not there and you can occupy that place? On the other hand, retail actually gets challenging because this behemoth HDFC now has the advantage of cheap money from HDFC Bank. So equally for both reasons, do you see a challenge in retail and do you see an opportunity in wholesale?
So clearly there is an opportunity in wholesale. We will not go into land, I just want to clarify, but we will get into real estate. Wherever there is development, we will be funding that. And as you've correctly said, that the competition for lending to real estate with HDFC is moving away from this market is now reduced, and therefore there are opportunities. Also, as you know, that the real estate cycle is also moving in the a positive direction. As far as the retail is concerned, I think we have invested significantly in branches, and we are going to those areas where larger banks do not want to go. And there is a good growth potential in retail, and we are finding that. We have been able to grow at about, as I said, 50% plus from the same quarter last year.
Okay.
And we've added branches, we've added people. Today we have more than 400, and we have about 420 branches.
Okay.
And these are more in the semi-urban, the tier 2, tier 3 cities, which is not the natural place for banks to come
Fair
in.
point. What about margins? Since you say that, yes, with the behemoth going away, you have more opportunities in wholesale. And, interest rate hikes are perhaps behind us. You think margins can improve? Is 4.3 the lowest you would think?
I think so. Margins will improve. That's what we are also seeing. But
Any internal targets?
No, there is no target yet, but margins should improve.
Okay, now for the final question, sir. This interesting M&M purchasing a 9.9% stake. I mean, at the moment it's 3.5%, but they have declared their intent to go to 9.9%. Considering that you've thrown your hat wholesale in the housing lending, especially retail lending, I would assume you would be desirous of a banking license. How are you viewing this? Do you think there is a chance that if M&M gets into the banking foray, you have a chance? How are you looking at this incident at all?
So I don't know what I know as much as you, probably less than that. I've just read in the media and heard in the media that it is just an investment that they've made, and it is not any strategic value. So, I mean, a strategic intent. But as far as we are concerned, I think our book today is still, we can support it without really needing a banking license. And I think let's see as size grows, and let's see as the regulators, what they decide at the appropriate time, we'll think about it.
Interesting conversation there, but need to get into a break.